Hey warriors, I hope you're all doing great. This is your friend RAHUL Agarwal and I'm here before you with a very exciting video. From today, on this beautiful day, we're going to start a new series called as the assignment series. Now, what is this assignment series? The logic is very simple. Imagine you've already gone through examinations. You've already written your past examinations but could not clear through. Imagine you have already completed your classes. The faculty has done amazingly well to teach you everything, but somehow you have just not been able to practice the questions. You have a grid understanding on what the ICI study material questions are, but unfortunately I've never experienced what kind of ICI exam questions are coming in. All those kind of difficulties does cause a lot of problem, especially in a subject called direct taxes. Now, in my classes, generally when I take classes, my solution guide is already comprehensively covering even the past exam questions. So we do have a detailed analysis on the past exam questions as well, so that you get a good understanding on how the ICI exams look like. But even I have an inherent limitation. When I am conducting a batch, let's say for example May 26, the batch would have somewhere started around September, October. And therefore, my material could have only been updated to certain amendments, to certain questions which has come in until the previous month. Yes, because I also have to complete the question bank, I have to give it for printing and then give it to students as well. I cannot keep updating my question bank every single time just because a new paper comes in. But it does not mean that I cannot support you with a different alternative. And therefore, today's video is going to be about discussing all those additional questions that can really help you practice well for examinations. This assignment series is basically going to be a compilation of all your recent exam papers which have come in from ICA perspective, so that you can have an understanding on the kind of questions ICA is testing you, on the kind of difficulty ICA is posing before you, and at the kind of time which you have to spend on each chapter properly. Now, I have taken an effort from my side to not just compile all the questions and put it in the same format as what ICI gave. No. What we have done is we have taken each paper and we have identified the chapters against it. If this question was pertaining to residential status, a separate assignment has been created for residential status. If this is created for salaries, then it is separate assignment for salaries, which means we have already taken all the past papers, we have compiled it together and we have split it properly into chapter wise sequence. This will help you with two things. One, for all those students who have just started their May 26 classes, who are currently ongoing classes or are probably preparing for September 26 as well. You will now have a better opportunity that as soon as you complete the chapter, you can immediately go to the assignment series and you can try answering the questions, to have a grip on understanding whether the chapter is already making sense to you. Before even you proceed to the next chapter, if you can already feel comfortable that okay, these are the questions which ICA is trying to test you, these are the questions which you are able to answer from your side, and you're already having a good understanding on it, you are already through. You should have a better amount of confidence before you move to the next chapters, and that is what we're doing. Second, in this assignment series, we're not going to add any additional questions. I'm not going to be putting any more difficult questions because that's already discussed in the question banks. We're only talking about the recent papers which has come in so that you can have a better understanding on things. Third, all these questions have already been updated of. Now, I know the papers of income tax do change, which means whatever questions you have attempted up to Jan 26 will not have the same relevance as what is going to happen in May 26. The Finance Act changes, the assessment year changes. So yes, we have also taken that effort that we have taken each question and we've updated that question to the relevant assessment year. So yes, this question bank is already going to be enough for you to practice apart from your current classes. My only request to all of you is don't just rely on this assignments. Please also go through your normal classes and then come to this assignment. You'll have a better grip on things. Now, how does assignment look like? The assignment will be basically like this. I would have prepared a compilation. The compilation, let's say for example, says assignment number 1, residential status and scope of total income. You have MTP number 1, MTP number 2 and so on and so forth. So we have about 10 questions in this residential status for you to practice for yourself. What exactly is going to happen? This is the same template I'm going to follow for the next chapters. Salaries, HP, PGBP, clubbing, set off, everything included. We'll get the same topic like this. Yes. Which means you may sometimes notice that the assignment may not have a specific chapter. Let's say for example, it may not have a basics of income tax chapter because that is not something like a full-fledged question ICA tests you. It's part of comprehensive. So what we'll do is when we're compiling it, we would have put it in the comprehensive list of questions. You will find all chapters relevant as much as ICA has tested you, just that it will not be in the same template as what you're expecting. So there are some chapters which will be covered here. There are some chapters which may not be covered here. At the same time, you may sometimes notice that residential status may have 10 questions. Salaries may only have 5 questions. HME may probably only have 3 questions. Why is that? Very simple. When it comes to question number 3A, ICI can either test you salaries or HP. They can't merge both. And therefore, in some MTPs, you will see salaries is tested and that would have been taken. In some MTPs, you would have noticed HP is tested and so that would have been taken. It does not matter. Even if one question is something that you're able to practice properly and you're able to answer to yourself, you will already have the boost of confidence to do properly for yourself. To that extent, I would only request to rely on this assignment to the best extent possible. Take this as a good advantage for yourself and try to do it along with me. This assignment series that we're doing is going to be like a writing practice, which means I may not write the complete content of what you're supposed to write, but I will give you a hint and understanding on how you read a question, how you should attempt a question, what exactly should trigger when you read the question, and how you should be writing the answer. Yes, so to that extent we will be doing it, which means the final answers will be presented in notes which I will share across with you later on also, but there will be no significant write of English because that is something which we will discuss. If you're able to discuss and manage it along with me, that is already good enough for me. Yes, so good writing practice is going to happen. My only sincere request to all of you is when I am trying to write an answer, before that pause the video, read the question once from your side, try to answer the question once from your side. If you're able to do that, then look at my video and try to cross compare to see if the answer is matching. If you're only going to rely on my video, yes, Rahul Bhaiya is talking, so let's talk to Rahul Bhaiya. Rahul Bhaiya will give all the answers. You're not going to do well for your examinations. Yes, so first take a pause, do it yourself, then compare with my paper and see if the answers are matching. Is that making sense to everyone? Are we good to go? Perfect. Awesome. Let's start with that understanding. The first RTP series which we're going to start is what we are going to call as residential status. Assignment series number 1, residential status. I'm going to read all the questions along with you. You're going to tell me what is the understanding here and we're going to mark accordingly. Yes. So if you have already taken a print of this, have a pencil with you and start marking it along with me. If you don't have a pencil, that's completely fine. You might have already done the analysis from your side. Just cross compare and see if you have matched it with me. Yes. Good. Let's see. It says, I have a person called Mrs. Smita. Mrs. Smita has come to me as an Indian citizen, as an employment with an overseas company located in UAE. Point number 1, when it comes to residential status, any person who's outside India for employment purposes, in the current year, if the person is leaving India, only 182 days condition should be satisfied. Yes or no? Read. She is not liable to tax in UAE. Okay, deemed residential status may come into picture, but only secondary. Let's check if she is non-resident first. During the previous year 25-26, she has come to India for 121 days. See, which means a person is outside India and is visiting India. Visiting India is coming in for 125 days, which means her employment outside India now is not relevant. Now is not relevant. Understand? Current year, if I am leaving India for employment purpose, then only I will take that condition. If I am already outside India, visiting conditions come into picture. Keep that in mind. She was in India for 50 days, 100 days, 76 days and 145 days during the past years. In the notice, if you notice, I have 24, 25 variko information given to me. Her annual income for the following data are given to you. The salary which is accrued in UAE, income accruing in India, deemed to accrue income, life insurance premium. Mrs. Smita wants to pay tax under default tax regime. Very, very critical. Point number 1 to be kept in mind. Person is going for DTR. From the information given above, you are required to determine the residential status and the total income of Mrs. Smita. Now, here is where you have to pay attention. Look at this carefully. First of all, I am not going to be looking into the condition of 182 because the question said it is 121. Second, if I am not going to look into 182, then I need to check whether the person is leaving India for employment. No. Is the person outside India visiting India? Yes, but when the person is outside India visiting India, then you have to check for something else. Check for the condition of Indian income, which means I need to now know what is her Indian income for the purpose of checking the 15 lakh condition. How do I check for Indian income? Very simple. You need to know what is the income as if she was an RNOR. Yes, so which means I am now going to assess this. What happens if she was an RNOR? In this case, if she is an RNOR, what will be the answer coming to me is what the question is. So let's try to understand what is the situation if she is an RNOR. Point number 1. The question says salaries accrued or arise in UAE 15 lakh rupees. I am an RNOR. RNOR means I am going for default tax regime and this is income arising outside India. Because this is income arising outside India, it is not going to be taxable to me in India. Nothing to do with India case here. Second, income accruing or arising in India, 2 lakh rupees. Very simple, straightforward. Income is accruing or arising, RNOR will say taxable. Agreed. Second, income which is deemed to accrue or arise in India. Again, section 9, therefore fully taxable. Then income arising and receiving in UAE from a business set up in India. Here is the catch point. I am an RNOR. If I am an RNOR, any business set up in India or any business controlled from India or profession set up in India will be fully taxable in India for an RNOR. So by that logic, this 5 lakh rupees is also getting taxable for me. Then comes and says life insurance premium is paid by check in India. Notice life insurance premium is generally ATC, but the question comes and says the person is going for DTR. Because I'm going for DTR, I can't claim chapter 6A reduction. If I'm not claiming chapter 6A reduction, this automatically gets ignored off. Agreed, agreed. Very beautiful. With that logic, I have now concluded saying that my income for the person has been assessed as 14 lakh rupees. Yes, now that my income has been assessed as 14 lakh rupees, I can straightforward come and say a person outside India visiting India has an Indian income less than 15 lakhs. Condition 2 is anyway not relevant. And if the condition 2 is not relevant, the person is going to become a non-resident. Yes or no? So in this answer, I will straightforward come and say because Indian income has been less than 15 lakhs, non-resident conditions will apply. And if you are a non-resident, then in that case, you don't need to tax something as R and OR. I'm going to rework this answer and I'm going to tell that the person is NR. If the person is NR, what will change? Only the fifth level of income is not taxable, which is the business control from India. In that logic, this is anyway not taxable. This continues to be taxable. 7 lakhs continues to be taxable. 5 lakhs gets ignored off, and therefore my net income becomes 9 lakh for the current year. My net income becomes 9 lakh for the current year. A very beautiful question, people, and yet you have to keep in mind. Yes, so what is happening here? I am an Indian citizen outside India, visiting India, not having Indian income up to 15 lakh rupees. I will consider myself as a non-resident. If I am a non-resident, I don't have anything to worry about. I can't be a deemed resident. I can't be an RNOR to that extent, which means I automatically become NR. NR means I don't have to tax any kind of income coming from business control from India, and therefore the net income is going to become 9 lakh rupees. Simple, straightforward. Yes or no? Yes. So if I have to conclude this for myself, people, what am I going to say? In this question, I'm straightforward going to say my income is going to be 9 lakh rupees for a non-resident. I'm going to copy this into my documents as well so that it's easier for me to cross compare and send across the final document to you. Yes, so what am I going to come and tell you? If you can write it along with me as well, people, this will be really helpful for your practice. What are we going to say? Question number 1. I'm going to simply come and say because Smita is a Since Smita is outside India, visiting India, check of Indian income, I believe I should go black. Yes, I think we should do it together as if you're writing an examination. So let's go black, people. Yes, let's go black. We're doing it in black. Yes, I think that is more sensible for me as well. Yes, so I'm saying since Smita is outside India, visiting India, check of Indian income of 15 lakhs is important. Since Indian income is not exceeding 50 lakhs, she is a non-resident. She is a non-resident. Yes, thus her total income is rupees 9 lakhs as computed above. Yes, now people, I am making this extremely clear. Rahul is not writing notes as if you're writing an examination. If you wanted to write it as per ICA examination, you have to write the whole thing as per section 6 of Income Tax Act, so and so, so and so, so and so. I'm here only to give you the final answer. I'm really hoping you can write the answers from your side. I'm here only to discuss with you the authenticity of the question. That is all. Yes, so please don't come and tell me in the comment section, Rahul, you have not given me proper notes. I don't know how to write notes. People, you would have done that in the classes. I don't have to spend time on that. If I start writing notes along with you, then this video will go for hours. I don't have that much patience, and you don't have that much patience to watch a video for that many hours. So yes, you have to do the question first. You're only here to cross compare and tell me what is the answer. Clear? Yes? Beautiful. So that is question number 1. I hope this makes sense to all of you. Clear to go? Shall we proceed forward? Let's proceed forward. Question number 2. It says on 22 September 2025, Mr. Prajot, age 55 years, is an Indian citizen and have left India for the first time to work as a CFO of the company. Notice, person is leaving India for employment purposes. He visits South Africa on vacation every year for a month to visit her brother's family. Why do I care, people? He goes to some other country. I am not bothered. I am only bothered about what happens in India. The incomes are given to you. You're required to compute the total income of Prabodh for the assessment year 26-27. If he has opted out of default tax regime, person is going for ATR. Person is going for ATR. Let's check the question. Now, people, with that facts in mind, first things I need to know what is his residential status. So let's first compare the residential status. If I am looking at 22nd September, 22nd September means what? I am going to, let's start putting notes itself. I think that makes sense. Yes, let's start putting notes. I'm going to find some notes and I'm going to prepare it accordingly. Let me take a minute. How do I do split screen? Yes, I have a split screen here. I'm going to put notes here and this is what the notes are going to look like. People, please don't mind my handwriting. It's not easy to write on a tablet. Yes, so please don't mind my handwriting. I'm going to leave it as it is. Yes, I am at question number 2. Let's put question number 2 onto my notes. Notes, and yes, question number 2. Let's see question number 2. Yes, so question number 2, people, what am I going to do? First, I'm going to check for my residential status. So what am I going to do? I'm going to first come and say, let's find the residential status of a person. Yes, so what is going to be the residential status of Mr. Prajot? Prajot or Prabot? Prabjot. Names, I tell you. Prabjot. Okay, Prabjot is the person, people. Yes, some Punjabi guy, I would assume. Yes, so Mr. Prabjot, I need to check the residential status. Now look at this carefully. Person has left India on 22nd September, which means he was there from April. So let's check this properly. How much am I going to have? April ka 30 days, May ka 31 days, June ka 30 days, July ka 31 days, August ka 31 days, September ka 22 days. People, 22nd September is also considered as stay in India. Person leaving on the date of departure is also consumed as stay in India. Let's take the total now. What is my total going to look like? I'm going to have 30 plus 31 plus 30 plus 31 plus 31 plus 22. Answer comes as 175 days, which means I am not in India for more than 182 days and therefore Prabjot has been confirmed to be a non-resident. Yes, I'm going to confirm Mr. Prabjot as a non-resident because Prabjot has not been in India for more than 182 days. Now, Rahul, 60 days and 365 does not matter. Understand, the person is leaving India for employment purposes. When I'm leaving India for employment purposes, an Indian citizen leaving India for employment will not trigger any other conditions and therefore he will directly become a non-resident. I don't know about deemed residence conditions, so I will not check that itself. Now, let's check the final answer. How do I need to tax the total income? What am I going to do? I'm going to take all my incomes and I'm going to find what is my total income going to look like. So, let's find out my total income. If I take all these numbers. Yes, so what am I going to tax is my question. What am I going to tax? So, let's say income. Computation of total income. Yes, so computation of total income. Tell me, people, help me out here. What is going to happen? I am going to check what and all incomes are going to be taxable for a non-resident. First question says salary which is computed from company in Australia, received in bank account in Australia. People, I am a non-resident. As a non-resident, can I be taxing any incomes which are received outside India? Answer is no. I'm not going to be taxing any income which is received outside India. So this income is going to be not taxable. This income is going to be not taxable. Second, dividend from South African company received in South Africa. Again, dividend is from outside India, which means I'm going to say not taxable. Third, interest received from South Indian Bank, 21,000. This is going to become taxable. This is going to become taxable. However, I want you to notice carefully. It says interest from Indian bank, and therefore Mr. Prabjot, who is not a senior citizen, non-resident, 55 years, and will be eligible for something called 80 TTA. Yes, I will give him a deduction of 80 TTA. Now, if you're just now going through the batch of May 26, you may probably not know this, but once you complete the batch, you will have a better grip on that. 80 TTA deduction will come into it because you have an interest income coming into picture. Next, loss from business in South Africa, control from India. Now, people, controlling word and everything is only relevant if you're an RNOR. I am not an RNOR, therefore this income is also not relevant to me. I'm going to ignore it off. Finally, agriculture income from a land situated in Gujarat. Agriculture income and all is fully exempted, which means the answer is going to be 21,000 rupees. Yes, so my GTI is going to be 21,000 rupees. Claim section 80 TTA deduction. Claim section 80 TTA deduction of rupees 10,000, giving me my final answer as 11,000 rupees. Giving me my final answer as 11,000 rupees. This is my total income. This is my total income. Simple, straightforward question, people. If you got the first answer right, then great. Otherwise, no, you have to figure it out properly. Yes, so this is what the answer is going to be. I think this was fairly an easy question. Did not make any difficulties for that matter whatsoever. You just had to write some proper notes, but you would have got the answer equally enough. Clear? Yes, good. Let's proceed forward, my friends. Let's proceed forward. Question number 3. Question says, state with reasons whether the following incomes is chargeable to tax in the hands of the following independent scenarios. I'm going to copy this question into my assignment so that it's easier for me to note down. Yes, question number 3. Question number 3 comes and says they want me to confirm whether the incomes are taxable or not. First question says Mr. Mahesh has received dividend of 7 lakh rupees and has paid by a foreign company outside India. I have received dividend of 7 lakh rupees declared and paid by foreign company outside India. Such dividend has been declared in respect of shares which derive its value substantially from assets located in India. Yes, so this is what the answer is. He is a resident and not ordinarily resident. Now, people, I want to give you a disclaimer. This was from May 25 examinations, and May 25 suggested answers itself has come and confirmed that this is an out of syllabus topic. This was actually a CA final syllabus, where in CA final you learn a topic called indirect transfers, and indirect transfers will come and confirm to you that any kind of indirect transfers, capital gains alone is taxable in India, dividend is not taxable. So here my feeling is ICI would have probably told a student that this is a grace mark if you have attempted the question, and they should have given you full marks. But nevertheless, just for your understanding, I am an RNOR. RNOR means I can only tax 5 incomes: received in India, deemed to receive in India, accruing or arising, deemed to accrue or arising. In this case, the dividend is coming from a foreign company. Money is also received outside India. Just because the underlying assets are located in India should not make an impact. The income deemed to occur or rise in India is only a condition given when dividend is given by an Indian company. This is not an Indian company, and therefore this is outside India, which means I am going to say this is not taxable. I'm going to say this is not taxable. Are we making sense? Clear enough to go? Very good. Next. Mr. Shivansh is a non-resident in India and is residing in China and has deposited 16 lakh rupees with ABC Limited, an Indian company. In the current year, he has received interest at the rate of 12% per annum in China during the previous year 25-26. Notice, non-resident is receiving interest. Where is he receiving interest from? He is receiving interest from India. The moment a non-resident is receiving interest from India, interest rules come and say, look from the payer's perspective. The payer here is ABC Limited, Indian guy, which means a resident paying interest to a non-resident will always be taxable in India unless it is confirmed that the money is used for outside India purposes. Look, no, it says Shivansh's resident deposited 16 lakh rupees with ABC. He has received interest at 12% per annum. Nothing has been mentioned. When nothing has been mentioned, it will be assumed that the resident is going to use it for Indian reasons. And if it is going to be using it for Indian reasons, then for the non-resident, it will be taxable in India. This answer is taxable. I hope this makes sense to you people. Keep this in mind. A resident making a payment to a non-resident will always be taxable in India unless the money is utilized for reasons outside India. Clear? Yes? Good enough. Next, let's the last one. Last one says, Mr. Ramesh is receiving a royalty of 8,25,000 in respect of consideration for providing patent rights to Mr. Sunil. So Mr. Ramesh is paying to Sunil. Yes, Mr. Sunil has developed a new product in India by utilizing the patent rights. Product has been developed in India. 30% of the royalty was received in India and 70% of the royalty was received outside India. Both Ramesh and Sunil have a status of non-resident. Non-resident paying royalty to a non-resident will always be taxable in India if the utilization of the rights have happened in India. Which means if you notice, the person is using it for developing a product in India. The moment he said he is developing a product in India, income has fully deemed to accrue or rise in India, which means I don't care whether 70% is received or 30% is received, full 100% is taxable. Full 100% is taxable because the income has deemed to accrue or arise in India. Clear enough to go? Yes, people, I think barring question number 1, which was anyway given as grace to you, question number 2 and 3 should have been able to manage. It was an easy question, which means May 25 was an easy paper for you to attempt off for residential status purposes. Yes, clear? Good. Let's proceed forward, my friends. We are proceeding on to question number 4. Let's read question number 4 now. Yes, lengthy question. RTP September 25. Let's see what the question says. Question says, I am Mr. Varun, Indian citizen, engaged in consultancy business in India. Okay. He shifted to Dubai in the year 2020, not in the current year, people. He went past year itself to expand his consultancy business overseas. Gone that year. He is visiting India every year to supervise his office in Delhi, which means he has already been outside India. Person is now visiting India. In the current year, the stays have been given to you. In the current year, the stay has been given as 100 days, which means current year, the person was not in India for more than 182 days. I will not be checking the basic condition. I have to go for second condition. Second condition, I need to first check whether Indian citizen is visiting India with an income more than 15 lakhs or less than 15 lakhs. Yes, let's check that. During the previous year 25-26, he's earned the following incomes. Again, people, for me to check this, I need to assume his status is RNOR and I need to check the answer. So let's check what happens if he is an RNOR. First one says income from consultancy business in India, fully taxable. Income from consultancy business in Dubai, don't care. Don't care because at the end of the day, the consultancy business is outside India. Yes. Next, agriculture income from land situated in Kerala, fully exempt. Indian income. Dividend from an Indian company received in Dubai. People, the moment dividend is coming from Indian company, it is always taxable. I don't care. Next, interest expenditure and investment in above shares. Here is where you need to know something else. Now, as a student who has only done residential status, you may probably not know this, but let me clarify this to you. When you go to section 56, IFOS chapter will basically come and tell you that when you have any dividend coming from shares, only 20% of the expense can be claimed as deduction as an interest. Which means dividend income ka 20% is the maximum deduction that you can claim. Yahan pe, if you're getting 15,000 rupees, 15,000 is not going to be 20%. 50,000 ka 20% makes it 10,000 rupees. So 10,000 is the maximum deduction that you could have claimed off. You can't claim 15,000 rupees. You can't claim 15,000 rupees. You are required to determine Mr. Varun's residential status, assuming he is not liable to tax in Dubai. Okay. Compute the total income of Varun if he opts out of default tax regime. That is what the question says. Yes. So I'm going to keep this in mind, people. Let's look at this carefully. It says Varun is Indian citizen engaged in consultancy business, shifted to Dubai to expand his consultancy business overseas. He's visiting India every year to supervise his office in Delhi. Stay in India for the current year and past years has been given to you. Now, I do have a particular challenge here, people, because somehow I think ICI wanted to try differently here. If you notice the first line comes and says he had his profession set up in India and then he went to Dubai to expand his consultancy business, which means technically this person had set up the profession in India and has gone somewhere else to earn the income. By that logic, you can come and say an RNOR who is going outside India, earning income from outside India, from a profession set up in India, will still be taxable for an RNOR. And by that logic, I can come and say this income can become taxable. This income can become taxable. Now, this is a choice to make, people. You can make an assumption. Question is very vague on this. You can make an assumption saying the 4 lakh rupees can be taxable for an RNOR on the premise that the profession is set up in India. Or you can come and say nothing has been mentioned. He's expanding his consultancy business overseas, which means it can be a separate profession altogether and therefore should not be taxable. I think if I make an assumption of 4 lakh rupees also, the answer will not change. Notice carefully, if I make that income of 4 lakhs also, the answer is still going to be 14 lakh 40,000 rupees. Yes, now regardless of how I look at it, the income is less than 15 lakh rupees, which means a person who is engaged outside India and is visiting India with an Indian income less than 15 lakh rupees is anyway going to be declared as a non-resident. If I'm going to be declared a non-resident, then the answer remains the same. I'm simply going to say 10 lakh rupees. This income is now not going to be taxable because a non-resident is not going to tax any professional setup in India. This was anyway out. This 50,000 becomes taxable and then 10,000 becomes claimable, which means the answer now becomes 10,40,000 rupees. The answer becomes 10,40,000 rupees. Yes. So what is the residential status of the person? Residential status is non-resident since Indian income is less than 15 lakh rupees. Is less than 15 lakh rupees and basic conditions are not being satisfied. Yes, would you care about the person not being liable to tax in Dubai? No, because again for deemed residential status also you need to have at least 15 lakh rupees, so not relevant. Compute the total income of Arun for a non-resident. NR total income has been confirmed to be as 10,40,000 rupees. 10,40,000 rupees. People, all that information given here is relevant, not relevant. It's completely not relevant because the Indian income itself did not cross. I did not even have to look at the information. This is how you have to read the question. Sometimes reading the question can give you more insights than what it is. Without even reading the complete question, if you start jumping into things and you start answering questions differently, you will get a wrong answer, whatever. Yes, so be very careful about this fact and do it properly. Now, question number 2 alone, you have to make an assumption, people. So to that extent, you may have a difference of opinion. The adjustment number 2 may have a different of answer. But I think regardless of how you look at it, whether you take that number or you don't take that number, the answer would have remained the same. So I think this is more academical. It doesn't matter. You could have chosen to ignore it off. Yes, yes, great enough. Yes, so that is what I'm going to say. I think consultancy business is taxable. This is what the answer is going to be, and this is how the solution looks like. Any difficulties here? Good enough to go? Very good. Let's proceed forward. I am almost halfway through, people. Yes, almost halfway through. Let's stick together and let's complete this off. Sorry. Question number 5. Mr. Rohan has furnished the following particulars for his income. Compute the gross total income for the assessment year if he is a ROR, RNOR and NR. Yes, a very beautiful question where they're asking you, tell me what is the answer for the same person being an ROR, RNOR and NR. I think we can do this directly itself, people. So I can directly copy paste and put it in my notes and then we can do it together. Yes, so let's put this answer out. Let's see how the answer looks like. I am going to confirm to you what is going to happen if the person is ROR, RNOR and NR. Yes, so let me do one thing. I am gonna add it here itself. Yes, so let's make an assumption that the person is ROR, RNOR and NR. Very simple. Yes, this is what the statement is going to look like. You're going to give me the answers, people. I think this is going to be a very easy question for you to also practice. So please try it along with me. Please make sure that you get the right answer. Yes, it's adjustment number 1. It says income earned from business in Iran, which is controlled from Delhi, and 65,000 is received in India. Notice the business is outside India. Control is happening from Delhi, which means the moment control is happening from Delhi, R and OR will say, I'm going to tax it. ROR anyway global income is taxable, and so to that extent ROR will come and say fully taxable. RNOR will also say fully taxable because the controllership has taken place in India. Yes, the controllership has been taken place in India, but when it comes to NR says controllership and all is not something I know. Only 4 incomes are taxable for me, and therefore 65,000 is what I am going to tax. Clear enough? Good. Second, pension is received for services rendered in India but received in Iran. People, where did the service happen? The service happened in India. The moment you said service happened in India, it is deemed to accrue or arise. Yes, I'll probably put it here. It is deemed to accrue or arise in India. Yes, and therefore by that logic, because it is deemed to accrue or arise, I think everyone is going to pay tax on this. So it is 24,000 for all the parties. Clear? Yes, good. Third one says dividend from an oil company, an Iran based company received in Iran. People, companies also outside, received also outside. What does RNOR have to do? RNOR will say not taxable, NR will say not taxable. ROR unfortunately has to pay tax on global income, so he's going to take the hit. Yes. Next, interest on money borrowed by Deepender, a non-resident, for the purpose of investment in shares of an Indian company. So NR, no, Understand this carefully. People, it is saying that I am going to receive money from a non-resident. So non-resident is going to give me money. First of all, as an ROR, I don't care. ROR is going to say fully taxable. Yes, next notice, a non-resident is going to give money to a resident for the purpose of investment in shares of XYZ Limited. People, the section 9 deemed to occur or rise in India conditions is only applicable for an NR, which means the moment you are a resident, even that situation is going to make you fully taxable in India. You have to pay tax on this. You have to pay tax on this. Coming to the last part. Now, notice, I am saying I am also NR, person is also NR. NR is going to give interest to another NR. In that case, there is a specific exception. Specific exception comes and says, when it regards to interest, when an NR is paying an interest to an NR, then in that case, it is only taxable in India if it is used for business operations in India. Other sources is not covered there, and therefore that exception hits here, because here the investment in shares is given. This is another source. If this is other source, it will not be taxable for an NR, and therefore to that extent, this is going to be fully exempt. This is going to be fully exempt. I hope this makes sense to you people. I'm repeating myself once again. When an NR pays an interest to an NR, it is only taxable in India if the money is used for business operations in India. It is not for business operations and therefore will not be taxable in India. Will not be taxable in India. Had this been R making a payment to NR, I would have still said it is taxable even if it was not for business operations. But NR to NR alone has an exception. We have discussed this in class many times and I've given this as an exception rule also. I hope you remember that. To that extent, the answer gives me like this, which means this is what the conclusion is going to be. I think if I have to total this off, this is going to be 89,000. 80, 1 lakh 4, 1 lakh 9, 1 lakh 59,000. And then 80 plus 24 is 1 lakh 4, 1 lakh 9, 1. Okay, losing touch here. 80,000 plus 24,000 plus 15,000 plus 55,000. Answer gives me 1 lakh 74,000. That is my conclusion answer. That is my conclusion answer. Are we making sense on this? Is this clear to go? Yes, very good. This is what the answer is, people. The adjustment number D is the most critical one. So I hope you make this sense and you be very, very careful about it. I'm going to mark this as LDR. Yes, last day revision topic, something for you to keep in mind. Yes, yes, good. Let's proceed forward, my friends. We are halfway through. Let's look at the balance questions. Balance questions come and say question number 6. Question number 6 says, Mrs. Priya is a person of Indian origin and a citizen of India. Notice the person is a PIO. Yes, the person is not an Indian citizen. The person is a PIO. The person of PIO has got married to Mr. Aaron. Aaron is an Indian citizen residing in Canada. Now, husband is an Indian citizen. Residing in Canada on 24 January 2025, last year itself. She came to India on 25th March 25 and has left India for Canada on 10th July 2025. Now here is where the catch point is. Notice carefully. She had come to India on 25th March. I don't really care, because understand, my residential status only happens from the 1st of April. Which means if I come on 25th March also, that is not going to impact me in any way. 1st of April is what my criteria is. You need to keep in mind the 1st of April. So let's keep the 1st of April in mind and then decide accordingly. She then returned to India with her husband on 24th February 26 to spend some time with her parents-in-law for 30 days. Now notice, this time she has come to India with her husband. Husband has also come to India, so keep that in mind. Yes, for 30 days and thereafter returned to Canada. She stayed in India for a total of 400 days during the last 4 years. During the previous year 25-26, while Priya was in India, she received the following gifts from her husband's relatives and friends. So she's now received gifts also. Determine Priya's residential status and compute her total income and tax liability for the year, assuming she does not opt out of default tax regime. Now people, this is the question. I've also discussed it in my previous videos. A very ugly way of giving this. It says she does not opt out of default tax regime, which means she is going for DTR. Yes, you could have rather say she is paying tax under DTR, but unnecessary I say is now confusing you to say not to opting out. Not opting out basically means you are opting in for DTR and therefore DTR is the solution here. Yes, so that is what you need to keep in mind, people. That is what the answer will look like. Now, with that understanding, if I have to put this answer out, what is going to happen? I need to first find the residential status. So let's find the residential status first. What is going to be my residential status? By this logic, question has come and told me that I only need to look for Priya here. I'm not bothered about what is happening to the husband. Only Priya is relevant here. So let's first find Priya's residential status. Yes. So I'm going to put question number 6 and I'm going to say residential status of Mrs. Priya. Correct? Yes, let's calculate the number of days. Notice the person has come to India for the very first time on 25th March 25. I don't care about 25th March. I am only bothered about 1st April. So which means I am going to check what happened from 1st April 25 to when did the person leave? The person left on 10th July 25. So 10th July is also going to be considered because technically that is also considered as stay in India. By that logic, if you check, it is going to be 30 days for April. It is going to be 31 days for May, it is going to be 30 days for June, and it is going to be 10 days for July. Yes, this total should come to 61, 91 and 101 days. Correct? Then the question comes and says she returned to India with her husband on 24th February to spend some time for 30 days and then returned to Canada. Which means here I don't need to compute the number. Question itself has come and told she has come for an additional days. So which means between the period Feb 26 to March 26, she has come to India for a period of 30 days. By that logic, her total has now come to 131 days. Correct? Now notice carefully. I am an Indian citizen who is outside India and is, I'm a PIO. I'm a person of Indian origin who is outside India and is visiting India. My stay in India should be 120 days plus 365 days only if my Indian income conditions are satisfied. Which means with this condition, I need to now come and check what is my Indian income. So let's calculate her Indian income here. Yes, so I'm going to say calculation of Indian income. What is my calculation of Indian income? Notice people, what are my Indian incomes given to me? My Indian incomes are 3 incomes. Yes, so I have 3 incomes of my Indian incomes given to me. My 3 incomes of Indian incomes are as follows, which means I have come and confirmed there are gifts which I have received. What are the gifts that I have received? I have received a gift from husband's parents. People, husband's parents basically mean my in-laws. Correct? Yes, so which means I am going to receive money from my in-laws first of all. Yo, what has happened here? Yes, so I am going to receive gift from my in-laws. Now, in-laws gift is going to be fully exempt because parents, relatives to be covered as IFOS exemption. Second, I am going to receive money from husband's sister. My husband's sister is going to be part of my relative definition, which means she is also going to be exempted. And third is that I am going to receive money from very close friends of husbands. Now people, husband is fine, close friend of husband and all is not covered, which means 16 lakhs is going to be fully taxable. Yes, and so by that logic, what has happened? First of all, people, let me check if this is on occasion of marriage. No, during the previous year, while she was in India, she received the gift. Nowhere has the question come and mentioned that she is receiving this gift on account of marriage. If it was on account of marriage, I would have had a difference of opinion, but this is not on account of marriage, which means my Indian income has come to 16 lakhs. My Indian income has come to 16 lakhs. With my Indian income coming to 16 lakhs, people, now the answer is fairly clear. I can come and say, since his stay is more than 120 days plus 365 days in the last 4 years. If I notice the question could have the question said I was there in India for about 400 days something. Yes, so in the last 4 preceding previous years I was there for more than 400 days, which means I am now an RNOR. Yes, direct RNOR conditions will apply, people. You don't need to check for anything else. If a person PIO who's outside India visiting India, Indian income more than 15 lakhs is going to be there for 120 plus 365. Direct RNOR conditions will apply. Because I'm a direct RNOR, this is what the answer should look like. I don't think there is any other income this person has. Yes, the person has no other income, which means my total income is also going to be my total income is also going to be 16 lakh rupees. I'm going to conclude my total income as 16 lakh rupees. Now, this is a peculiar question, people, because in this question, even if I was an NR, the answer would have not changed. Yes, at the end of the day, even if I was an NR, I have received money from Indian sources. From Indian sources, income is always going to deem to accrue or rise in India. Gift coming from Indian sources are always taxable. So the total income is always going to be 16 lakhs. It does not really matter whether you are an RNOR or NR. Yes, but yes, because the question comes and asks, this is what the solution is. Clear with me on this? I hope this makes sense. Yes, yes. Shall we proceed forward? Very good. Let's move on forward to question number 7. We are at 45 minutes and therefore we are doing amazingly well. Let's go forward. Question says, Shweta is an Indian citizen, a chartered accountant. She is a working partner in Shweta and Varun Associates, which was set up in Chennai, India. See, notice this is a set up to profession. I have a profession which is set up in India, very critical to be kept in mind. She visits foreign country A quite often and provides accounting services to corporates there in her individual capacity. I am doing some income outside India also. In country A, she is not subject to any tax. Okay. The details of her other incomes are given to you. The remuneration from her CA firm in India, amount received in India is 16 lakh rupees. Amount is received in India. The moment you say amount is received in India, this is going to be fully taxable. Next, income received from providing accounting services in country A, received in bank account of country A. People, income is also outside India, received also outside India, will only become taxable if if I'm an ROR. Yes, I'm not going to assume I'm an ROR, which means I'm going to put this on hold. Next, dividend from companies incorporated in country A and received in bank account in country A, again going to be treated as an ROR case only. Next, income from business in country A, which was set up in country A but is controlled from Chennai, 7 lakh rupees, which means now I am going to have a business controllership. R and OR will say fully taxable. So for Indian income purposes, I am going to say fully taxable. Ascertain a residential status along with taxability of income in the following situation. Situation number 1, she did not visit India during the previous year 25-26 at all. Now people, if she does not visit India for previous year 25-26 at all, which means even if my Indian income is more than 15 lakhs or less than 15 lakhs, I would not care. Yes, at this stage I would come and say, even if the person is not going to, give me 1 second. She did not visit India during the previous year at all. Yes. So if she did not visit India during the previous year, she is a citizen of India who is working outside India, has not visited India at all, which means my second condition of 120 and all is not relevant. I don't care about it. But can I be checking for deemed residential status? Check no. Question says the person has no income taxable in other country. Somewhere it mentioned that, I saw it. Where is it? Yes, it says in country A, she is not subject to tax in any tax, which means now I am not a resident of India. At the same time, I am not even subject to tax in that country, which means I am now becoming a deemed resident. As a deemed resident, I am going to be classifying myself as an RNOR. Yes, so I am going to classify myself as an RNOR. As an RNOR, what is going to happen? I am going to be taxable for all my RNOR incomes, which means income received from providing accounting services, no, it's not going to be taxable for me. The 8 lakh rupees is also not going to be taxable for me. I am only going to be taxing the 7 lakh rupees because it is controlled from India. I am going to be taxing the remuneration, which is taxable from India, which means the answer is going to be 16 lakh rupees plus 7 lakh rupees. And therefore the answer is 23 lakh rupees. Yes, can I, let's say, put it like this? I'm gonna, let me try something. I'm gonna say deemed resident that is RNOR. People, I hope this makes sense. Yes, so I have confirmed to you that I am a deemed resident and an RNOR. This is what the statement is. Second, it says she visits and stays in India for 200 days every year since preceding 12 years, including financial year 25-26. She stayed in India for every year, including current year. Now, I am an Indian citizen who is outside India and is visiting India. When I am visiting India, I need to check for my Indian income. Check for my Indian income. 16 plus 7 is going to be 23 lakhs. 23 lakhs becomes more than 15 lakhs. And then I need to check for 120 plus 365. 200 days every year means that I am not even bothered about that condition. I can check for 182 days itself. Check for 182 days. If I am going to be in India for 182 days every year, it means I have been in India for residential status as a resident. Every year it is going to be 200 days, meaning the person is going to become an ROR. Yes, so ROR is going to be my status, people. I'm going to repeat myself once again. Look carefully. This is where I say I was trying to confuse you. The question of visit does not matter anymore because I'm staying in India for more than 182 days. If I'm staying in India for more than 182 days, I am automatically a ROR here. I don't need to worry about other things. Yes, everything else is not relevant to me because I am staying in India for more than 182 days. Yes, now if I'm an ROR, I don't have to worry. Every bloody thing is taxable for me, which means it is 16 plus 5 plus 8 plus 7. So it is going to be 16 lakhs plus 5 lakhs plus 8 lakhs plus 7 lakhs is going to be fully taxable. 16 plus 5 is 21, 29, and then 36 lakhs is going to be taxable for me. Yes, yes, this is what the solution is going to be. Third one, she did not visit during the previous year 25-26, and her income from profession in India is 4 lakh rupees during the financial year instead of 16 lakhs. People, the moment it became 4 lakh rupees, my Indian income has dipped down. My Indian income has dipped down, has become less than 15 lakh rupees. Because it is less than 15 lakhs, neither does deemed residency apply, nor does RNOR apply. Every condition is going to get violated. Answer is going to become NR. If I am going to become an NR, what am I going to tax? First, I can only tax this 4 lakh rupees of income from profession. Next, can I tax the accounting source income? No. Can I tax the dividend received? No. Can I tax the controllership? No. Therefore, the answer is directly going to become 4 lakh rupees, and this is what the solution is. Yes, this is how the answer looks like, people. This was an interesting question. Yes, definitely a bit of a trick from September 25. Not that it's very difficult and you couldn't manage it. You definitely could have managed it, but yes, they have tested you on some integrities which you have to keep in mind. Adjustment number 2 is where you could have got confused, because when you see the word visit, you always start talking about more than 180, more than 120, more than 120. Before even you go to 120, check for the basic condition. Basic condition of 182 has been satisfied, and therefore the person to that extent itself has become a resident, an ordinary resident. That is what the statement answer is. I hope this made sense to all of you. Be very, very careful on this. A very beautiful question for you to keep in mind. Yes, yes, good. Let's move on forward. I'm at question number 8. Question number 8 comes and tells me what? Question number 8 says, Mrs. Anchal is an Indian citizen, government employee working for Indian government. People, a government employee working for Indian government has specific benefits. Section 9 comes and says, if a government employee visiting, who's working outside India, then any allowance and perquisite given to her will be fully exempted. Keep that in mind. She submits the following information during the previous year. Determine the gross total income, assuming that she opted out of provisions of 115 BAC on the assumption that she is RNOR or NR, which means I'm now going to check whether she is RNOR or NR. Both the situations have to be computed off. I think this has to be solved. So let's solve it together, people. Let's try to solve it together. I'm going to start from here. This will give me more space. Yes. So let me put a solution where I'm going to tell you what is going to happen if I'm going to be RNOR and what is going to happen if I'm going to be an NR. That is what the question says. Yes. So let's find out the answer accordingly. Let's make solutions there. Yes. First, when you see the question, people, I'm seeing some brackets and all coming up, which means losses is also going to get tested, and therefore we need to be very careful. Whenever you have an adjustment of losses coming into picture, losses chapter becomes extremely critical, and losses always come and say that you need to always start from loss perspective. So let's keep that in mind. Before you go and read every adjustment, let's answer all the adjustments one by one carefully. First one says, the person is opting out of default tax regime. Good. Yes. Second, salary income received in Malaysia for services rendered there. People, salary is received in Malaysia, services are also rendered there. What am I supposed to do? I am supposed to fully tax it because I am working for Indian government. Here is where the problem starts. Students start making an assumption that because this is a money received outside India, it will become not taxable. Answer is no. This is going to be taxable because at the end of the day, it is a government employee. When an Indian government employee is working outside India, it is deemed to accrue or arise in India. It is going to be taxable. Yes. So it is deemed to accrue or arise in India. And this was a very beautiful adjustment that you had to keep in mind, which means this answer is going to be fully taxable of 2 lakhs. But people, because this is salary and the word used is received, it means I need to give my standard deduction, which means I am going to tax 1,50,000 here. I am going to tax 1,50,000 here. Are we clear? Making sense? Good. Read forward. Profit from business carried on in Chennai. People, this has nothing to be worried upon because the business itself is in Chennai. It is going to be always fully taxable. Then loss from a business carried out in Vadodara. People, I have losses from business, profit from business. I can knock off each other, and therefore this is also going to be treated as taxable, which basically means you can net off. Next, losses from business carried on in USA. Though profits are not received in India, business is controlled from Rishikesh. People, if the business is controlled from Rishikesh, then this person can take it as a loss. R and OR will get this number, but NR has nothing to do with it because NR is not going to talk about controllership. Controllership is not relevant for an NR, it is only relevant for an R and OR. Next, unabsorbed depreciation of a business in USA. People, business is in USA. What to do with India? Nothing. You cannot take anything in India. Therefore, this is going to be ignored off. Yes, not relevant at all. Or one second. It says loss from a business carried on in USA, which is controlled. People, I think this has to be read together. Yes, you cannot read this independently. This 2B has to be read together, which means by that logic, I can come and say the 16,000 also can be taken by an R and OR. Yes, I'm going to make an assumption of control. I'm going to make an assumption of control from India. Now, technically, you can make an assumption saying this is a different business, but it logically makes more sense to tag it along with the previous one. Yes, next. Profits from a business in Bali, which is controlled from Delhi. Again, you have seen control from Delhi. 60% is deposited in a bank in Bali, 40% is received in India. Now, people, when it is controlled, control is going to be fully taxable for an R and OR. So, he does not have to worry. Coming to the NR, NR is going to come and say, boss, I am not worried about controllership. I am only bothered about what is received in India. Only 40% has been received in India. So, therefore, I am only going to tax 28,000 rupees. 28,000 rupees. Clear? Next, it says rent from a house property in USA and is received in USA. People, everything is happening outside India. Why do I care? It is not relevant to me. I'm going to ignore it off. Yes, and therefore this is what my statement is going to look like. This is how the answer is. Now, people, now that you have made the statement, it's always important to check from a losses perspective. Always check the losses. I have losses from business, UD from business. All of those can be set off against profit from business. So let's check. 66 and 60 and then 76 I have enough business losses and therefore I can adjust it off. So which means R and OR will not have a problem. Coming to NR also, 80 and 20 will make sense and therefore everything is fine. I don't need to worry about the transaction. I can start taxing this accordingly. Yes, so let me find the answer. It is 1,50,000 plus 80,000 plus 70,000 minus 66,000. The answer should come to 2,34,000. The answer should come to 2,34,000. Next one saying, people, 1,50,000 plus 80,000 plus 28,000 minus 20,000. Answer should give you 2,38,000. 2,38,000. Yes, this gives me my right answer and therefore this is what the statement is. This is what the statement is. The only challenge here was the point number 1, people. I really hope you have marked the point number 1 as LDR because this is where the critical part is. The government employee who is receiving money outside India will become taxable in India because the money is received from Indian government. That was a very critical adjustment you have to keep in mind. Normally, I know people will look at it and will come and say salary from outside India not taxable. No. Because this is a government employee, this is an exception rule and therefore has to be taxed off. So very beautiful question for you to keep in mind. I hope this is clear. Clear? Yes, amazing. Let's read on forward, people. I am at question number 9. Last 2 questions to go. Question number 9 says, I have Mr. Nikhil, an Indian citizen living in Dubai. So the person has been in Dubai since 2006. He has never come to India for a single day since then, which means 2006 lender today variko he has never come to India. He has earned the following incomes during the year. Income is given to you. Determine the residential status of Mr. Nikhil and taxable income for the previous year 25-26, assuming no other income arises during the previous year. I have no other incomes coming in the previous year. Nowhere has the question come and mentioned that the person does not be liable in Dubai, which means I am now going to make an assumption whatever it is. Yes, it says determine the resident status of Mr. Nikhil and taxable income for the previous year 25-26, assuming no other income is arising during the previous year. Person has never come to India, which means either it will be NR or it will be deemed resident. So we need to check that condition. Let's check. Says income which is accrued or arisen in Dubai but is not liable to tax in Dubai, 20 lakh rupees. People, no mention of controllership from India, therefore it is not going to be taxable in India even if I was an R and OR. Yes, so on the assumption that I am an R and OR also, this is not going to be levied. This is not going to be taxable. Second, income accruing or arising in India, fully taxable. Third, income deemed to accrue or arise in India, fully taxable. Fourth, income arising in Dubai from a profession set up in India. This becomes taxable for an RNOR. Yes, because this becomes taxable for an RNOR, notice 10 plus 8 plus 5 becomes 23 lakhs, and therefore Mr. Nikhil will be treated as an deemed resident. Will be treated as a deemed resident because Indian income is more than 15 lakhs. Correct. Second, what would be your answer if income arising in Dubai from a profession set up in India was 2 lakhs instead of 10 lakhs? People, if it was 2 lakhs, then what would happen? 8 plus 5, 13 plus 2 will become 15, which means it will be Indian income is equal to 15 lakhs, and I don't need that. I need Indian income to exceed 15 lakhs. Because Indian income is not exceeding 15 lakhs, the person will become a non-resident. The person will become a non-resident. Now people, the taxable income will become what? My total income will become 5 lakhs plus 8 lakhs alone. Yes, because I am now a non-resident, I don't need to care about the profession which is set up in India. I am only bothered about income which is actually taxable for a non-resident, which means 13 lakhs would have become the answer. Third, what would be your answer if Mr. Nikhil is not an Indian citizen but his parents were born in undivided India? Which means now Mr. Nikhil is not going to be an Indian citizen, he is going to be a PIO. Yes, deemed resident does not apply for a PIO. Deemed resident is not applicable for a PIO. So the answer is same as 2. The answer is same as 2, which means I will be treated as a non-resident. Non-resident will become 13 lakh rupees, and that is what the solution will look like. Yes, this is what the adjustment sheet is, people. I hope you made sense on this adjustment sheet. This was not a very difficult question, but yes, did have some intricacies which you had to keep in mind. So I hope you have made that adjustment note properly. Yes, and I am moving on forward to the last question. If you can read the last question quickly, people, before I copy paste and finish my things off. I am going to take this also. Sorry, I know I'm wasting time, but I guess when I have to send you this document, it's important that I cover everything properly. And yes, this is what we have. Shall we proceed forward, my friends? Yes, let's proceed forward and let's complete the last question of the finishing of residential status here. Yes, what is the last question saying? The last question comes and says, I have determining the residential status of total income of Arvind under optional tax regime with the following facts given to me. Now people, this is where the question gets a little lengthier, so we need to read the question properly. Let's do it together. Let's understand the question carefully. Question says, Mr. Arvind is age 62 years, which means I know Mr. Arvind can become a senior citizen if he is a resident. If he is a non-resident, I don't care. But the question says, Mr. Arvind is a Canadian citizen employed in senior research position with a multinational corporation in Gurgaon. Yes, which means person has been in India. The person has been in India. Next. To share his research expertise, he travels to group companies abroad by remaining based out of group companies in India, which means he is always part of Indian company, but he only travels to foreign countries. His travel schedule for the financial year 25-26 has been confirmed as follows. During the current year, his stay in USA was 25th to November, UK was 28th to 23rd December, and Germany was 10th January to 24th March, which means I need to first calculate what is his stay in India. So let's first check out my stay in India. Yes, if I look at this carefully, April I was there for 30 days. May I was there for 31 days. June I was there for 30 days. July I was there for 31 days. August is where the problem starts. Notice August I have his stay in USA has been given as 25 days, which means I need to tell 24 days he was in India. Yes, now here is where the trick comes. Now people, you would have normally read saying the date of departure and all is considered as in India, but here they tell the stay is USA of 25, which means I have stayed in USA for 25, probably means 24th I would have left India, and that is what the assumption I am going to make. Yes, September I was not there, October I was not there, November I have come back to India. November I have come back to India. Now how many days have I come back to India, people? Again, 10th November will be excluded because the stay is outside India. So 11, 12, 13, 14, 15, 16, 17, 18, 19 is what I'm going to take. 20th he has traveled to UK, which means it's going to be 9 days. That brings me to December. I think December he has come back to India on 23rd December, which means 24, 25, 26, 27, 28, 29, 30 and 31. 3, 6 and 8 days he is there in December. January he was there in India. Yes, again he was there in India for about 9 days. Yes, 10th he has again left. So January he was there for 9 days. That brings me to March. March he was there for 24th he left, which means 25, 26, 27, 28, 29, 30 and 31. That becomes 7 days. Whew, so much calculation. Yes, now let's check the total and let's see how many days he was there in India. Which means 30 plus 31 plus 30 plus 31 plus 24 plus 9 plus 8 plus 9 plus 7. Answer becomes 179 days. Very close corner. Yes, so 179 days is what I was there in India, which means I am not going to be there for 182 days. With my 182 days being condition not satisfied, I need to come and check what happened in the past years. So it says present in India for 380 days in the last 4 years, people, and foreign citizen who is coming to India will now have a condition of 60 plus 365. 60 has been satisfied, 360 also has been satisfied. The person has become a resident. The person has become a resident. Second, the person has stayed in India for 700 days. I should stay in India for less than 730 days to become RNOR, which means concluded answer. Our answer is RNOR. Yes, I have now confirmed myself to be RNOR, and that is what the facts are. With my confirmation of RNOR, people, now I need to check my income statement. Question says you need to find the total income. Income received as follows. Salary of 15,80,000 fully credited to his Indian bank account. Now people, 15,80,000 credited to Indian account, which means income is received in India, and therefore this becomes taxable. But I am not going to tax 15,80,000 because the person is opting out of default tax regime. I am only going to tax 15,30,000. Yes, why do I tax like that? Because it says credited to his bank account. Matlab this is received. This is received, and I don't want to tax the receipt. I want to tax the income. Income from salaries gives a standard deduction of 15,30,000. Next, dividend of 48,000 coming from Treat Limited and Singapore based company which is deposited in Singapore bank account. This is not going to be taxable because it is from a foreign company received in foreign country, not taxable. Third, interest income coming of 10,500 which is credited to his savings account in Punjab National Bank, Delhi branch. I have received 10,500. So what am I going to do? I'm going to tax the 10,500 and I'm going to claim 10,000 rupees as, no, can I claim the full deduction? Yes, people have become a resident, right? I've become a resident. Because I've become a resident, I can claim the full 10,500 rupees as a deduction under section 80TTB. Under section 80TTB, that is what my statement is going to look like, and this is what my concluding answer is. So as a conclusion answer, people, here is a case where I'll come and say I'm an RNOR. Because I'm an RNOR, 15,30,000 of salary plus nothing of my interest income will be taxable. So only 15,30,000 will be fully taxable in my hands, and this is what the statement will look like. Yes, so this is what the concluding answer is, people. I hope this makes sense. Now, I have not written many notes, but I hope the understanding of the topic makes sense and you're able to make an answer accordingly. Yes, so this is the final answer of question number 10, and with this we are concluding of our assignment series of residential status. A very beautiful set of questions. If you come and ask me, people, you definitely can make a lot of difference in this question bank. If this question bank 10 questions you were able to answer along with me, then you've already done an amazing job. You have done it properly well and you should be proud of yourself. If there are some mistakes that you have been making, then you probably need to ask yourself, why have I been making that mistakes? Can I correct it off a little bit more? If you can correct those smaller mistakes, people, I think residential status is going to be a very important chapter for your examination, because it always comes for question number 2. Yes, so if you can start answering question number 2A properly with resident status like this, I think you will do an amazing job for your examination. So yes, please focus on the residential status. This assignment document along with the question bank will be shared across with you as a PDF document in the link itself. So you can check the description box and you'll get the link. You can take it from there. As we are proceeding forward, people, assignment series number 1 is done, which means we'll be proceeding forward to assignment series number 2, 3 and forward, salaries, HP and so on and so forth. So please stick to the channel. Please go ahead and subscribe the YouTube channel called CA Rahul Agarwal so that you can get this constant updates, not just from CA Inter perspective, but also CA Final perspective direct tax. So if you have any friends at CA Inter, CA Final who are writing this May 26 and forward examinations, do recommend them to subscribe to the channel, because there are some exciting videos which are coming up for all of your practice, with a very simple intention that 2026 becomes the year where you become a potential qualified CA for your lifetime. Yes, that is the final conclusion which I wanted to have in today's video. I hope you all have a great time ahead. Please watch out for the upcoming videos, because there is going to be a lot of learning from there. Until that time, I would like to take a leave from all of you. Take care everyone. Have a nice day. Bye bye.